can be fed in, additional ore can be fed into that operation. Very shallow ore from surface down, good grades. Just a snapshot of feasibility, completed 2019. So 9-year life, 25,000 tonnes of copper. Life of mine, low strip, very competitive costs. If you compare that today to the copper price, which is sitting around $4, around the $4.50 mark. So very large margins between the costs and the selling price of copper today. Generates at a $3.30 price that we use in the feasibility, generates around $100 million of free cash flow a year. If we plug in today's number, that's probably more like $140 to $150 of free cash flow per year. So, you know, very substantial cash flow business. Capital cost to develop that, $220 million. And I'll just touch on that as we go through because it's particularly relevant to the deal that we've done. Just in terms of sensitivities, I think it's important takeaway here. There's a number of things that we have underway. So we're, you know, doing some optimization work on the project. There's $35 million of risk value there, which we're looking to capture through that work. That's almost complete, should be complete, you know, in the next couple of months. And then if you look at the sensitivities to copper price, the feasibility was done at 330, as I said. And if we're sitting today, you know, the project valuation's more like just purely on, without the upside included, it's purely based on the project that was studied. This is close to 400 million with a, you know, very, very strong internal rate of return. So look, the deal. So this is really the major news and probably the main thing that I wanted to talk about today. So this is really an enabling deal for the company. We've done a deal at the project level for Delta Dunia or DOID to put $50 million into the mine construction. That's in a number of tranches, 10 million, two 10 million tranches initially, $20 million and 10 million, so 50 million all up, and that's to go into a whole range of different works related to the development of the and construction of the mining operation. So it starts with completing the front end engineering work. Then it goes into the civil and mine engineering and construction, the development of the open pit mine, the development of the heap leach pads, and then contributions towards buying the long lead time items that we need to build the process, the SXEW processing plant. So by spending that $50 million, DOID will earn 51% at the project level and Asiamet will retain 49%. That deal, a heads of agreement was signed circa 6 weeks, six or so weeks or so, and we're looking to have the binding documentation complete by the end of the year. We're going flat out on it at the moment. Both parties are very keen to get it done as quickly as possible and working towards that. We've also, you know, we've already got meetings underway with banks. We've been working together with DOID, a number of bank meetings, mainstream lead banks for resource projects in the Asian region. And, you know, that's ongoing and we have weekly meetings related to the different work streams. So, you know, it's already serious. DOID's already, you know, pushing us hard and you know, we're, you know, engage with those guys on all the different aspects of developing business. So it's very real. It's going to happen. It's going to happen quickly. I don't think the market's woken up to that yet because of the failed transaction we had previously with Eternum. People are thinking, well, let's just sit on the sidelines and wait till this is done and see the proof in the pudding. But DOID is a different kettle of fish completely to Eternum. Maybe I'm just going to flick through here and tell you a little bit about them because I think it's pretty important. So they're a publicly listed company on the Indonesian Stock Exchange. You see the financials there, $600 million of revenues per annum. And, you know, around close to $250 million of operating cash flow. And that continues to rise. That's off the back. They're a very large mining services business. And they service some of the biggest mining companies in Indonesia, Adaro, Barau, Bayan, companies of that magnitude. So these are very, very large coal producers. What does DOID do for them? They cover the whole spectrum of things, and you'll see the relevance of this to Asiamet's project, right? So engineering design, procurement, construction, design and construction of mine infrastructure, contract mining side, very big materials movement. So logistics and handling, and the energy and power side, and they've just gone into renewables energy, which is very relevant to what we're looking to do here as well. I think importantly, they are they're a local company, but they operate to international standards, and they've just moved into Australia. They've bought a large mining services business in Australia from Downer EDI. The other key piece of this is that they have very strong capability around financing. Obviously, with a business like that, they've built strong banking relationships, both locally and regionally. I should just talk a little bit about the principles behind Doid, because I think that's particularly relevant as well to why I'm so certain, so confident that this deal is going to get over the line, and that they will be our partner going forward. So Doid is majority owned by a group called Tiggervest. Tiggervest is essentially two individuals, Raymond Zage and Ashish Gupta. They were previously Farallon Asia, very large, one of the most successful private equity investors in the Asian region. These guys ran that business. They've now come out of there, and they have their own investment business called Tiggervest, and they own the majority, that have a controlling position in Doid itself, the listed company. Those guys are people that I have personally worked with previously. So they were investor with us in a large gold mining operation in Indonesia, which was very successful for both of us. And we've had a relationship with these guys over 20 years. They were an investor into the Sepon mine that we built in Oxiana around 20 years ago in Laos. So we've known with them, we've built various mining operations and had them as a partner. So what they're looking to do is they continue to run their mining services business. They're growing that. They're utilising the very strong cash flows out of that to diversify that business away from coal and into metals and minerals mining, and direct investing into mining projects. They want to use the Asiamet, this as the starting project to build out a bigger platform, with a view that in 3 years or so to look at the opportunity to list this on the Indonesian Stock Exchange. Merdeka Copper and Gold is a great example they look to. Merdeka Copper and Gold's got 150,000 ounce gold mine in Indonesia, probably generates about the same cash flow we would be generating from BKM. And it has a large growth project, porphyry growth project sitting behind it. That company is listed with a market cap of circa $3 billion. So, Doid looks to their investment in Asiamet, 50 million into the project. They bought that 15.4% stake at the corporate level, and they can see that by developing this mine, getting into production, getting the cash flows, having the sort of growth opportunity that sits behind it, there's no reason that the business can't attract valuations similar to Merdeka. So that's sort of the basis for it. So what does it do for the shareholders of Asiamet? So it obviously provides fair value for us. Importantly, we had a couple of other groups who, again, blue chip groups who were very keen to deal with us on this project, but they ultimately wanted to own 75 to 80% today at the valuations that the company's trading at today. And whereas with Doid, they took the view that forming a partnership was the better way to go. They need us as much as we need them, in that they don't have any expertise in metals and minerals mining, and particularly the copper business as we do. And they respect that. So it's really a partnership where we retain half of the project, and we can capture the upside in that half that we retain, vis-a-vis selling out a majority position today at a cheaper valuation. So as I mentioned, obviously we've got, the balance sheet's much stronger now with that funding coming in. And you know, we've got a partner who's, when I went through before, you know, the different things they do. So they bring capability, very relevant to what we're doing, very relevant to what we'll be doing going forward. They bring financing capability and they bring local operating capability, and it fulfills the requirements of, you know, the long-term majority Indonesian ownership that's required under the Government of Indonesia regulations. So, you know, really, you know, I think it's a very good deal for the company. It enables the project now to get built. And, you know, we retain, you know, our full exposure to Butong, and, you know, 49% exposure to the other growth that sits within the KSK contract of work. And as I said, it provides a platform to continue growing the business. So, look, just to maybe, I just want to touch on quickly how I sort of see that playing out, if you like. So we've got a capital cost to construct on the project based on the feasibility study of circa $230 million. We look to finance that as a minimum, probably 50% debt. So 220, 110 of debt leaves 110. These guys are putting in 50, which leaves 60 to fund. That 60, we will have 49% of that 60 Asiamet to fund, circa 27, 28 million. And we believe we can cover that through prepayment, offtake financing, equipment lease financing, etc., such that the project is fully funded from our perspective. And we won't need to come back to the market for additional equity to essentially get this into construction operations and cash flow. So that's why, you know, it's such an important deal for us. And, you know, we're you know, it's now, as I said, we've got a lot of momentum behind us. I did mention people. So, you know, getting these guys, the company Boom, Doyd, plus the local contracting arm Boomer, and the principals behind the company, we're now getting some, you know, some really high caliber people that are saying, okay, now we can see this project's enabled, it's going to get built. And, you know, some very good construction people, and, you know, some very good people with the right experience looking, you know, to come in to senior management ranks, and also, you know, onto the board. So the profile of the company's changed. It's very much a major inflection point, as I said, and you know, we'll be more news on that coming, you know, fairly soon, where we've already got engaging, you know, to bring some new people into the business. So look, the near-term drivers of value. So obviously we need to update the feasibility study that we completed in 2019, which we'll do in the first quarter. You know, we're a much stronger copper price environment today, so we should see some good uplift in the feasibility numbers from a lift in prices, copper price, but also, you know, the work we've been doing around, you know, optimizing the copper recoveries. So that's, you know, that'll be an important milestone. And then, you know, the key thing really is project financing. As I said, we're already engaging with banks, gauging the level of interest that we've got there, the sizing, you know, what are their ESG and other requirements for financing, progressing, as I said, some offtake discussions now that, you know, the project looks, you know, it's clearly got a path to production. We've had, you know, quite a bit of inbound interest in copper in the offtake of the copper cathode. So that all of that's happening, and obviously there's, you know, there's the permitting piece, which is a, you know, an important milestone, but that will run sequentially. Simultaneously with all the other works that are happening to get the project essentially prepared and ready for construction. You know, with a view to looking to press the button to start the build in the second, you know, around mid-year, and pushing into the second, you know, into construction phase in the second half of the year. There's a lot of work to be done, but, you know, we think that's readily achievable. So a lot of activity going on there. As I said, some things, you know, at the corporate level happening around people. I think, you know, I'll touch on this in a minute, but it is an important time in terms of the way the company's profiled and viewed by the investment market. And it's very typical of what happens to a company like Asiamet as it comes through the ranks of a junior explorer developer and into an operator producer. Butong, big copper project, as I said, we've got there. We're continuing the local government community engagement works. That's going very well. And, you know, with a view to actually drilling a couple of deeper holes into that big resource early in the new year, the first quarter. And that should attract some pretty significant attention too. There's not too many projects like that sort of sitting around. Just a couple of other little bits and pieces. So you may have seen the drill results. We've been drilling. We've done about a bit over 3,000 metres of drilling up in this area here, BKZ. We had about 2 million tonnes of high-grade resource up there previously. The mine's sort of being developed here at BKM. If we sort of look at that, what we're seeing up in the northern part here, we have the copper zone sitting deeper than it is at BKM, and we have over the top of it high-grade lead zinc, and now we're seeing high-grade gold as we transition to the east. So, you know, our understanding of what's happening there is growing. That is leading to greater drilling success. I mean, every hole has hit. The resource is growing. And obviously that, you know, translates into a second stage project, bigger production, longer term mine life. So, you know, very important value adders. You know, the market's not recognising this at the moment because they're too focused on, you know, will this deal get done or not? But, you know, if any other company was putting these numbers out into the market in their own right, you would see the market getting very excited by them. I mean, they're sensational results. There's no other words for it. Every hole is hit. Every hole's hit high grade copper, zinc, lead, silver, and now gold. You know, 30 metres at nearly 5 grams and 160 grams of silver. So, I mean, absolutely sensational results. And every hole is growing the size of that deposit. And that sits immediately next door to where the mine's being developed. So, you know, it creates a lot of long-term, you know, optionality about expanding, you know, additional production. But first things first, we've got to get the thing into production, and that's what we're very much focused on. So, look, you know, I've already touched on Butong. It's an exciting project in its own right. High-grade copper from surface, big target underneath. You know, we'll get on there and drill that in the first quarter next year. So, this is the last, you know, important thing. You know, I didn't make this up. You know, you can get this off the internet. Some people will have heard me say that before. But, you know, this is very typical of the life cycle that we've been through. You know, investors get impatient because these things take time. And you look at the timeline on the bottom of here, I didn't make it up. That's how it is. So, you know, your discovery period, a couple of years, your feasibility, 3 years, 2 to 3 years, there's 5 years. You know, then you're into the development phase. And if you look at this, institutional strategic investment typically comes in about where we are now. So when the project is financed and the project's moving in construction, then institutions start to buy into the story at that point in time as it moves up, ramps up and into the operating and production and cash flow phase. So, you know, that's where we are. We're coming sort of out of that. And, you know, all the things that I talked about today, the partner, the funding, you know, the optimization work, the timelines, everything, that's where we're sitting today. So, you know, I think we're not far away from probably over the next 3 or 4 months. As we hit these, you know, substantive milestones, you'll see this thing, the interest from the institutional investors pick up and, you know, the share price start to reflect the true value of the business. So I think I might just stop there. And if there's any questions, happy to take them. Stunned silence. Must have been good.
Hi, Tony. Sorry, it's Steve Hutchinson. Tony, you talked about the $230 million for construction. Could you just run through the split on that again, please?
Okay, so 230 million is the capex based on the 219 study. Obviously, we've got to update those numbers, but let's call it 230 for now, of which 31 million is contingency. So if we say that that's debt financed, call it 50%, just to make the numbers easy. It's probably more likely that we could get close to 60, but let's call it 50. So 224 million. So therefore 50% of that is coming from debt, leaves 112 million. Of that 112, Doyd is contributing 50 towards the development as part of their earning. So that leaves 60 million to be funded. They will be at 51% and have to fund 51% of that last 60. We will be at 49% and have to fund 49% of that last 60, which is circa 28 million or thereabouts. And that's the piece that I said, you know, we'll be looking to get some off-take finance in place and, you know, equipment leasing finance, etc., to cover the majority of that 28 million, which will be the last piece that needs to be contributed from the Asiamet side.
Lovely, thank you.
All right, I think we're done.
Perfect. Well, if anyone does have any other questions, feel free to reach out to either myself or your account manager. And we'll be sort of quick to get those back to you as soon as we can.
Okay, thanks everyone.
Thanks so much, Tony.
Yep,
Thanks for your time, everyone.
Thanks,
Thank
Tony.
you. Thanks all.
Thanks, Tony.
Thank you. Bye-bye.
Bye.